I extend a very warm welcome to all of you to the 33rd AGM of your company. Firstly, this is to inform that all the directors of the company have joined this meeting. Our company secretary has informed me that we have the requisite numbers present through the electronic mode to conduct the proceedings of the meeting. The requisite quorum is present, hence the meeting is properly constituted. Shri R. Mohan, Chairman of the Audit Committee, Shri Mahima Agarwal, Member of the Stakeholder Relationship Committee, and Shri Rajendra Kumar Bhandari, Member of the Nomination and Remuneration Committee, are also present in this AGM, along with Mr. Mahadev. It is indeed a pleasure to conduct this AGM through the electronic mode, and I am happy to host you at this 33rd AGM, which has given the opportunity to several members to participate virtually in this AGM. On behalf of the Board of Directors, I would like to thank all of you for joining us. Your confidence and trust and support during the last 3 decades have made it possible for us to gain market share and respect in the industry. Moving on to the financial performance for the year 23-24. During the year under review, your company maintained its leadership due to continuous thrust on research, development, technology upgradation, innovative products, and is expected to further improve its performance in the forthcoming years. During the year under review, your company recorded a total revenue from operations of 423 crores and 56 lakhs, as against 386 crores 386.8 crores in the previous year, with an increase of about 9.5%. The profit after tax for the company has increased by 5.41%, which is 28.82 crores as against 27.34 crores in the previous year. The increased revenue from operations and profit after tax reflect the company's mounting operational performance during the year. The growth in sale volume, despite a subdued economic scenario, was made possible due to the focus of value-added products and quality products. Moving on to the current financial year performance. During the financial year 24-25, the gross revenue from operations of the company for the quarter ended 30th June 2024 was 113.73 crores, as compared to 105.89 crores recorded in the first quarter of the financial year 23-24, and the profit after tax for the quarter ended 30th June 2024 was 7.61 crores, as compared to 6.87 crores recorded in the first quarter of the financial year 23-24. The company anticipates better operational performance in the current financial year 24-25. Dividend. Your company has a robust track record of rewarding its members with a generous dividend payout, and in view of the company's operational and financial performance during the year under review, the Board of Directors at the meeting held on 19th May 2024 recommended dividend of rupees 4 per equity share for the financial year 23-24, and the total outflow for the dividend payout would be 424.4 lakhs increase. Moving on to corporate social responsibility. Your company is a responsible corporate citizen, and its vision is to actively contribute to the social and economic development of the communities in which it operates. In so doing, build a better, sustainable way of life to the weaker sections of the society and to raise country's Human Development Index. During the financial year 23-24, the company has identified various projects in the area of promoting education, healthcare activities, including promoting animal welfare, environmental sustainability, and across the country, and has spent 73 lakh rupees. Future outlook. The company is reviewing various segments with a view to consolidate, focus, and grow the core business and improve its margin on a sustainable basis. The company is also focusing on adequate capacity with a view to optimize the return on the capital employed. As a part of the strategy to enlarge our presence in diverse domestic and global markets, your company has already increased its production capacities through installation of the latest equipment in the recent past. Your company is continuously focusing on improvement of quality of products as per the domestic and global demands of customers through its research and development. At our R&D facility, we consistently are able to produce superior quality products at competitive pricing. Your company makes continuous efforts to adopt and implement new technologies and improve the product mix and process to create higher value items at lower cost, and to widen its range of new generation master batches and to facilitate production of customized products. Your company will continue to seek new markets while consolidating its hold on existing customers. We also look forward to a strong revival of the textile market, which is currently sluggish across domestic and international markets as well. Our way forward, in the first half of the third decade, we are now embarking on a mission to grow our domestic and global market share. We will continue to expand our capacities and achieve this mission. This would be rightly supported by our strategic objectives towards enhancing market reach, improving penetration in global markets, expanding product portfolios, strengthening distribution channels in Indian and international markets, and increasing the utilization levels. We also are evaluating inorganic opportunities as a growth tool. Lastly, I would like to express my sincere gratitude to my colleagues on the board and for their valued support in guiding our company. I'm deeply grateful to our dedicated employees. Our team is passionate and has made achievements possible despite challenging domestic and global situations. I would also like to express my heartfelt gratitude towards company's bankers, members, customers, state government of Rajasthan. Several people have asked questions, and we find that there is a lot of overlap between the questions. Hence, we will try and answer the questions in a consolidated manner, where we have tried to bunch together questions that are very similar in nature. And first question, there was a lot of questioning around growth, revenue, PAT, EBITDA. Right. As a company, we are continuously making efforts to grow our revenue, and of course, as a consequence, also lead to better EBITDA margins and also increase our profitability. So, and this is a continuous effort, and some results are visible already, as you can see with our growth, with our numbers. There were also questions around our pricing and our ability to price. So, actually, pricing is a very, very market dynamic and a market-driven activity. So there is no specific thing that we can say. We respond reactively and proactively to how the market asks us to respond in terms of pricing. So it's not a fixed market, it's not a fixed price business, right? So it's a very responsive business, and we continue to respond. And hence, there is a constant effort to continue to grow our revenue, EBITDA, and PAT. Projections at this time will not be available, but there is a continuous effort. There was a lot of questions also around exports. Our exports have dipped, but the main reasons that we attribute this to are the ongoing conflict. There is a conflict in Russia, Ukraine. There is a conflict right now in the Middle East that impacts sea routes heavily. There is the Suez Canal issue that impacts how we service export customers going forward. So we are of the opinion that all of this will improve, and sanctions. And of course, there are markets that we work in that are also facing sanctions, right? So that makes it difficult. So, but going forward, we are extremely optimistic that these things will settle down, and exports will see the trajectory that we are working on. There was also questioning on production capacity and utilization, right? The capacity numbers would be available in our annual report, right? And in terms of utilization, we are at about 80% utilization as a company. And of course, all the research, development, all the innovative activities that we are taking steps to do will, of course, result in better utilization and better customer service as we go forward. There were questions around return of capital employed. So the company is continuously actually investing in a future growth, and basically the whole endeavor is that we see better ROCE, right? So all efforts are being made from that perspective. So yes, we are in a very healthy and large capex cycle, and we've been so in few years. So, and it's all driven by our vision and ambition to keep growing the business forward. So we are very confident that all these capex cycles will lead to a better ROCE in the years to come. There was also questions around increased margin, right? And so there are multiple reasons. There is our research development focus, there is our customer focus, there is deeper market penetration, and all these lead to better margins. And but I think if I could sum it up in one philosophy, I would say that there is improved operational optimization measures across the business that lead to better margins that you see. No single activity leads to margin improvement. There is a host lot of collective things that the company does on a day-to-day basis that leads to us making better margins. There were questions around relationship with customers, relationship with suppliers, our engagement with new markets, right? We are constantly engaging with all these stakeholders, whether it is customers, suppliers. We are constantly trying to grow relationships across all these spheres. And of course, there is, needless to say, there is continuous investment in new R&D so that we can better serve the customer, we can increase speed of development and response time to the market. And there were questions around R&D facility, product quality. Quality has been a cornerstone for the business from ever since it started, and so has R&D been. And in order to do that, I think we have taken various steps and various initiatives in putting up. We are investing a lot in the R&D facility, a lot of the state-of-the-art equipment, and we have a new facility as well. So in order to carry out these product developments, in continuously invest in the future of our business, because it leads to investment in R&D leads to better customer service, helps us keep our technological advantage, which is a cornerstone of our business, right up front. So today I would say that when it comes to product R&D, it's a large focus area, and the market demands of it, and also it's a part of our DNA. So we, it's a combination of all, where R&D continues to be a large area of focus. There were questions around capex, utilization, solar plant, etc. So of course, as a company, we take continuous calls in terms of putting in capex to meet the growing market needs. And also, solar has been a large focus because green energy is something we strongly believe in. And our solar investments right now, we are we are very confident that most of this is payback within 5 years. Right? So that's so both capex is a dynamic thing, and we continue to keep expanding the business because, as I said before, also that we are in a strong capex cycle. So and we continue to invest, and a lot of the money that is being generated is being invested for the future growth of our business. And solar is one such initiative, along with R&D, along with capacity expansion, etc. There was a question around import duty of master batches. As we understand the question, I think it's around 7.5% as we stand today with the current laws. There were questions around the top priorities of the management as we speak today. And our top three priorities as we speak right now is one is to continuously increase customer satisfaction with our products. And the second one is that we want to continue investing in our R&D and be a market leader as far as R&D is concerned. And the third priority is that we continue to focus on development of our people. So these are the three core focus areas that we work on, and we believe that focus in these three areas shall deliver value all across. So so that is what we focus on. There were questions around corporate governance. There were questions around share trading. Of course, share prices are completely driven by market forces. We have no control on that, whether the prices are high or whether the prices are low. The market determines that, so we have no control on that. But what is good to know is that the book value of the share continues to increase as we see over the last few years. And as on 31st March 2024, it increased from 234 rupees to 261. So on 31/3/2023, it was 234 rupees, and as we speak today, on 31st March 2024, it was 261. There were also questions around liquidity, how we choose what liquidity positions we will maintain. If you see historically, we have practiced prudency all across, and I don't see that changing. We are, of course, we are a debt-free company, and we endeavor to ensure that we stay like that. And historically, we've always maintained comfortable liquidity positions. And as a philosophy, that's something that we endeavor to do. We don't, we like to maintain so that is something that we believe in and we do. There were questions around disposal of HOEC. As a company and as a board and as management, we constantly keep evaluating our investment positions. So there is, whenever the time is right, we will exit this investment. But giving a timeline, specific timeline to it, is not something that would be prudent at this time. But of course, we are constantly evaluating, as I said, we're constantly evaluating, we keep a track, and whenever we feel it's the right time to do it, we shall. There were questions around CSR's expense. Of course, I mentioned it in my opening statement as well, that we spent 73 lakhs, to be precise, right? 73 lakh 3,000. I think that was our CSR expense. And of course, with our new website now, various CSR initiatives have videos on it. And please go to our website, and a whole lot of activities can be visible as to what we do. And some of the questions I have not answered because we find that some of the questions have answers already given out in the annual general report, right, around capacity, etc. So we left it because those questions already have answers inside the annual report. So with this, I would say that, and if you have any more questions, we'll be happy To answer, you can just connect with our company secretary through our registered email address, or officially you can write to us as well, and corporate office as well, and of course our company website as well.